Hello everyone, welcome to our business education and research channel. Today we are going to explore the key terms and concepts every beginner should know before diving into the stock market. Understanding these terms is crucial for making informed decisions and building a solid foundation in stock market investing. By the end of this video, you will feel more confident in your ability to navigate the stock market. Let us embark on this learning journey together and empower you with the knowledge to succeed in your investment endeavors. What is a stock? A stock is also known as a share or equity, represents fractional ownership in a company. Each share you own entitles you a portion of the company's assets and earnings. Stocks are one of the most common investment avenues, allowing investors to participate in a company's growth and profitability. Owning a stock means you have a claim on company's earnings and assets. For example, if you purchase shares of Tata Motors, you become a part owner of the company. As a shareholder, you may receive dividends and the value of your shares may increase as the companies grow and becomes more profitable. Stock exchange. A stock exchange is a regulated marketplace where securities such as stocks, bonds, and derivatives are bought and sold. It ensures that trading occurs in a secure, transparent, and orderly manner. Function. Stock exchanges facilitate the raising of capital of companies by providing a platform for them to list their shares and allow investors to buy and sell these shares. The major stock exchanges in India, for example, are the Bombay Stock Exchange and the National Stock Exchange. For example, the Bombay Stock Exchange, one of the oldest exchanges in Asia, lists to over 5,000 companies, providing a wide range of investment opportunities for investors across different sectors. Bull and bear markets. Bull market. A bull market refers to a period of rising stock prices, typically fueled by investors' confidence, strong economic indicators, and an overall positive sentiment in the market. It is characterized by sustained increases in stock prices, encouraging more investors to buy. Bear market. A bear market, on the other hand, is a period of declining stock prices, often accompanied by widespread pessimism and slowdown in economic activity. During a bear market, investors tend to sell stocks to avoid further losses. For example, during the COVID-19 pandemic, the global markets initially experienced a sharp decline, entering a bear market. However, as governments implemented economic stimulus measures, markets rebounded, leading to a bull market that saw significant gains in stock prices. Market capitalization. Meaning of market capitalization. Market capitalization or market cap is the total market value of a company's outstanding shares. It is calculated by multiplying the current share price by the total number of outstanding shares. Categories. Companies are categorized into large cap, mid cap, and small cap based on their market capitalization. Large cap companies are usually more stable and have significant presence in the market, while small cap companies are considered riskier but may offer high growth potential. For example, Reliance Industries with a market capitalization exceeding 17 lakhs crores is an example of large cap company in India. Large cap companies like Reliance are typically well established and financially stable, making them attractive to conservative investors. Dividend. Meaning, a dividend is a distribution of a portion of company's earnings to its shareholders, usually in the form of cash or additional shares. Companies that generate consistent profits often reward shareholders by paying dividends. Dividends provide a steady income stream to investors and are a sign of company's financial health. Investors looking for regular income often seek out dividend-paying stocks, especially those with a history of stable or growing dividends. For example, HDFC Bank is known for its consistent dividend payments, making it favorable among income-focused investors. In the last financial year, the bank declared a dividend of 15 per share, providing shareholders with a regular income from their investments. IPO, Initial Public Offering. An initial public offering, IPO, is the process by which a closely held company offers its shares to the public for the first time. This allows the company to raise capital from a broad-based investors and marks its transition from a private company to public limited company. Opportunity. IPOs present an opportunity for investors to purchase shares before they are available on the open market. While IPOs can lucrative, they also carry risk as the company's future performance is uncertain. For example, Zomato's IPO in 2021 was one of the most talked about events in the Indian stock market. The company raised over 9,000 crores and the IPO was oversubscribed by 38 times, indicating strong investor interest in the food delivery giant. PE ratio, price earning ratio. The price earning ratio is a valuation metric that compares the company's current share price to its earnings per share, EPS. It is used by investors to assess whether a stock is overvalued or undervalued or fairly priced relative to its earnings. Usage. A high PE ratio might suggest that investors expect high future growth and are willing to pay more for it, while a low PE ratio could indicate that the stock is undervalued or that the company's growth prospects are poor. For example, suppose Infosys has a PE ratio of 25, meaning investors are willing to pay 25 for every one of the company's earnings. This ratio helps investors to decide if the stock price is justified based on the company's earnings potential. Portfolio diversification. Portfolio diversification involves spreading investments across different asset classes, industries, or geographic regions to reduce risk. By diversifying, investors can protect themselves against significant losses if one investment underperforms. Diversification helps in achieving a balance between risk and return in portfolio. It mitigates the impact of negative performance in one investment by offsetting it with positive performance in others, leading to more stable returns over time. For example, an investor with a diversified portfolio might hold stocks in various sectors such as technology, healthcare, and finance, along with bonds and real estate. This way, a downturn in one sector does not drastically affect the overall portfolio. Blue chip stocks. Blue chip stocks are shares of large, reputable, and financially sound companies that have a history of reliable performance even during economic downturns. These companies are leaders in their industries and are known for their stability and strong financials. Investment safety. Blue chip stocks are considered safe investments, especially for conservative investors looking for steady returns and lower risk. They often pay dividends and are core component of long-term investment portfolios. For example, ITC Limited, a conglomerate with diverse businesses ranging from fast-moving consumer goods to hospitality, is considered a blue-chip stock in India due to its consistent performance, large market cap, and regular dividend payments. Stock index. A stock index is a statistical measure that reflects the composite value of a selected group of stocks. It is used to represent the overall performance of a market or a specific segment of the market, providing investors with a benchmark to compare individual stock or portfolio performance. Purpose. Stock indices like Nifty 50 or Sensex provide a snapshot of the market's health and trends. Investors use these indices to gauge market sentiment and make informed investment decisions based on a broader market movements. For example, the Sensex, composed of 30 major companies listed on the BSE, is one of the most widely followed indices in India. It serves as a barometer for the Indian economy, with movements in the Sensex reflecting changes in investor sentiment and economic conditions. Thank you for taking the time to learn about the fundamental terms and concepts of Indian stock market. Armed with this knowledge, you are now better prepared to start or continue your investment journey with greater confidence. Remember, the stock market is dynamic and staying informed is key to make sound investment decisions. Continue exploring, learning, and refining your strategy as you build your wealth. Don't forget to subscribe to our channel for more insights and tips on navigating the world of finance and investments.